Hey traders, welcome to Charts and Coffee. Happy Wednesday, everybody. So yesterday I did a video at the Simpler Trading YouTube channel, and I'm not sure how many of you had a chance to check that out. If you haven't, please do, because I'm going to follow up a little bit on this. And if you have any questions, get them in early. I'll grab them in the order that they come. If you have a symbol that you're looking at, if you have a particular question about a setup, let me know the time frame. Let me know if you're bullish or bearish. Let me know if you have a position in that symbol already. I'll share with you my positions right now in the Sector Secrets Mastery. So let's get going. If you've been watching this show for any length of time, you know that we have a saying: what you trade is more important than how you trade it, which is really why watch list building is the number one thing that, when I look at my job as a trader, my number one job is I've got to find the symbols that have the chance of best follow through. And no doubt it's things like gold. Gold has really been exceptional for the better part of the last month. In fact, our first trade in gold was back on January 27. It's still something that I want to take advantage of. It's a little heavier. It's a little heavier than it's been, but I'll continue to keep an eye on what's going on gold. And then, depending on what goes on in gold, we've been keeping a really close eye on gold miners. Well, if gold is heavy, gold miners tends to be a little heavy as well. So again, have to keep an eye on that. But there's some other symbols that have been moving and grooving on the tech side of things. Whether that be Apple's been fairly resistant, Cisco resilient. Cisco's been pretty resilient. And then actually, I'm going to give you all a look at our current positions. So some of you might have seen this list. This is what I shared with you all in the free video yesterday. And notice it's not a list of sectors or even stocks that are usually on the television or really what most traders are talking about. We're looking at relative outperformers. This is a unique list. It's not, sadly or frankly, what most traders are going to be looking at. We have positions in anything that has an asterisk next to it. So we have a longer term position, not only in Coke, but also in Altria. Cisco, we have a long position in right now. And in Coke, we have a shorter term position as a swing at the moment as well. And that leads us to Tuesday's Trade Alert recap. This is what we've got right now. This is what our Sector Secrets Mastery traders are managing. We just closed out a winner in gold, opened up another trade, which is still, to be seen whether it will follow through. That's the 21 March 267s. And then we have a nice winner in Coke in the way, and would like to see some follow through in Cisco. I share this with you all because it's really important to understand what we trade is more important than how we trade it. And that follow through, which typically happens in trends, is where we want to be. All right. So again, if you have any questions, feel free to type them on in. And let's go ahead and jump on over to what's going on with the NASDAQ, the S&P, the Dow, and the Russell this morning. The NASDAQ is pretty darn heavy, but there are some relative outperformers in this group. I don't want to trade a symbol that has red candles. I don't want to buy calls, more specifically, and things that have red candles. So for example, let's take a look at some of the symbols that I was looking at in consumer staples. I'm long Coke. Coke's doing its thing. It's a little down today. That's okay. It's already paid me. I've moved to a break even. However, what do I want to avoid? Walmart had a pretty good day. Staples had a pretty good day, but I'm not going to trade this kind of stuff, right? And far too many traders think, and this is just an unfortunate way of what plagues retail traders, is that this notion that if something moves lower, right, that it's got to bounce. And this thing move lower still, right, until finally it bounced yesterday. And this is what hurts traders. You might say, well, Rog, couldn't I just sit in here? Sure, but what's the amount of dollars and your account at risk? Or worse, are you going to continue to add to losers and continue to increase the amount of risk by doing so. And eventually, it only takes one or two. This may not happen. And then all of a sudden, the wheels fall off the wagon. And that's where, so much of what I teach in the mastery is not focusing on what could happen if things go right. By the way, gang, that's what losing traders tend to do. If I buy this and it goes to this is how much money I can make. If you talk to traders who've been around a decade or two, or 3.5, like this one, you watch interviews with the legends of hedge funds, you'll notice they're talking about risk. They're managing risk. They're talking about at what point within the stage of a trade they've got zero risk, things like that. And yes, there are ways to do that. I can't say you can guarantee ever zero risk, but you can minimize risk, especially as a trade goes through its life cycle. And that's where, if you want to grow an account, it's not the things like a new indicator and a brand new symbol. Oh, this is where the action's at. It's about risk management, and it's about position sizing, because that's really the same conversation. And that's where traders get hurt. They do things that are absolutely going to hurt their account. And one bad add max debit loss can undo 4 or 5 winners. And that's why we talk about that chutes and ladders, sadly, state of most traders' P&L. All right. So again, please remember, it's the basic stuff that makes the difference. It's the stuff that it seems may not be that important, or it seems that, I have an approach, I have an indicator that takes care of everything. Yeah, I wish I had that. I wish I had something that was that immune to good old-fashioned risk management and position sizing. I have some great tools. A lot of you will, when we go through more symbols, you'll see daily price movement ranges are practically magic, but they don't trade themselves. They don't tell you whether or not the position size is too big for your account. So a lot of traders put way too much credence in their indicators and not enough in the process. And I mention that because this is my favorite topic, gang. It's the Holy Grail. It is the Holy Grail. Now, it sure does help if you have automation. It sure does help if you can understand the market structure. It sure does help if you have a way to measure volatility and volume. All those are really important, and all those are part of my process. But at the very, very base of every winning trader over time, right, is an understanding of risk and trading size. That's today at noon. So if you haven't checked it out yet, the immersion. So this is something that we're doing that's fairly unique. How many of you in the room are in the immersion, just out of curiosity? How many folks here are doing the 12 workshops with me over the next 3 months? I'm sure quite a few. I know we have our Sector Secrets Mastery folks in here too. So we're doing 12 workshops. And Simpler's never done this before and may never do this again. But this is something unique that we're doing because we thought, rather than one class, why not be with us? Look at that. Awesome. Why not be with me for the next 3 months? And then rather than a 4-hour class, which I love doing, don't get me wrong, but rather than that, especially in a year like this, where it's been tricky, it's not been Q1 of 2024, why not have my alerts and weekly bite-sized lessons that build upon each other? I'm not looking to, teach everything about trading in 4 hours anyway, right? I think what happens to a lot of traders, hear me out, is how many times have you taken a class? By the time it's done, you don't even know where to start, right? Or you take even a session, you go, oh my gosh, this is amazing information. Now what do I do, right? So this is really dealt to combat that. A lot of our traders say, Rag, I know what you do work, you share your trades, but I don't know where to start. And that's really where a lot of these workshops are going to give you that step-by-step, and take your hand and take you through the process of the things that you need to know. And this, I don't know, it gets any more important than that. So I'm super thrilled to be doing these workshops for the next 3 months, 12 workshops in total. And the next 2 topics, by the way, how to understand risk and trading size with options, and then how to understand risk and trading size with futures. So if you've been wanting to get into the futures side of things, you can check that out as well. So really stoked to be doing something completely different. And I think a lot of you are going to, I'm looking forward to hearing the feedback. I think a lot of you are going to enjoy this new way of doing things that we're doing in the Sector Secrets Mastery. All right. So good, awesome. Larry, Chris, Jeff, Greg. All right, Gregory, I love it. Willie, David, TW, love it. All right. Westlake says, I just joined Simpler Central. Cool. I'll be in there on Tuesdays and Thursdays. Yeah, my main room is a Sector Secrets Mastery, but I think you'll really enjoy Simpler Central. That's great, Westlake. Okay, so let's see what else we've got here. I mentioned gold. We talked about the NASDAQ. What about the S&P? And by the way, all four of the indices are trading above their previous session close here today. They're all trading above that key level. Previous session close is something I call the line in the sand. And the line in the sand means there's a sentiment read. Below it, bearish, above it, bullish. And I look at the 4 p.m. Eastern cash close. And if we're above it, I'm slightly more bullish than if we're bearish. I would favor movement to the upside. Probably the best look, well, yeah, S&P might be the best look. So here is where the previous session close is. You can see that cutting right across there, that yellow line right here. And then this is another zone of support that I'll be looking at here today. So maybe we might have some opportunity to the upside, which would be fine. Yeah, I would be fine with that. So we'll see what we've got after the bell. Please remember, and this is another really important thing. When you're looking at futures contracts, remember they're trading 23 hours a day. And we'll be getting into futures, like I said, not this week, but next week. So we'll be covering risk and leverage and the nature of futures, which is markedly different than options and stocks. So if I'm looking at the futures right now, there's a couple windows you can consider. And maybe if you haven't, consider these. There's a pre-market window where you've got the very early part of the U.S. session starting at 7 a.m. Eastern. I would put a hard cutoff. 9:15 latest. And then 9:30, whatever's happening now, at 9:30, now you have the cash open. Now you have a whole new group of traders trading stocks, trading SPY, trading SPX, as it would apply to the ES, trading financials, healthcare, energy, all those sectors that apply to the S&P. And then we're going to get that burst of momentum, burst of volatility again. So if you're going to trade pre-market, make sure that you respect that open. I know that I do. I want to be winding down, tightening stops, maybe closing trades somewhere between 9:15 and 9:30. And then I look at 9:30 as a brand new day. 9:30 to about 10:30. That's the first hour of the day. It's a brand new day. All right. And I'll also look at the next part of the day, which would be the PM session, AM session, but pre-market, AM, and then PM. The PM would start around 1:35. And that's the second session. By the way, Rob, do you have a cutoff? Yeah, I like to be out of afternoon day trades, or at least stop looking for new day trades by about 3 p.m. when the bonds close. And then whatever I have can either follow through in that last hour of the day, which can be really volatile, or it may not. So if you've never thought about the 3 windows that you can take advantage of, and I'll be talking about that a lot more next week. But what about for options on futures? When do I start looking for swing trades? When do I start looking for day trades? And how do I manage risk and trading size with each? So really 2 huge topics coming up in the next 2 weeks. All right, Jazz says I'm long Costco. Costco is a very spendy name. Let's go and jump into Jazz, the question on Costco, or the comment on Costco. So this is cracking open Staples. And, you bring up a good point. How does cost play into risk? Hugely, right? For a lot of traders who trade max debit, which we do not teach, when you get into that class today at noon today, you're going to learn, oh, Rob, you don't use max debit? No. What else don't I do? Do you use out of the money options? I do not. How many contracts should I trade? Depends on your account size. And I'm going to give you all literally a formula, but it's easier than that. There's a spreadsheet that I give you, and you download it to your desktop, open that thing up. It works on Mac, works on, Google Sheets, it works in Excel. Open that thing up, and then all you do is change just 3 things. The number one thing you're going to put in, the most important thing you're going to put in is your account balance, right? Then there'll be a couple factors around risk, That's it. And it's a drop down menu, right? It's multiple choice. And then it will tell you how many dollars worth of options that you can up to buy without risking a certain amount of your account. And we make it formulaic because so much of trading is emotional. The more formulaic, the more unbiased, the more sort of mechanical or automated we can make things, the more we can control, that part of our brain that wants to make emotionally, I think, I feel, I hope, right, based decisions. So Costco is a pretty good choice. Be careful with that one. It has the 5 green candles. Jas, good look. XLP itself, Coke, Philip Morris, Altria, Mondelez, Kimberly Clark, and Keurig Dr. Pepper would be on my list. Take a look at the trends there. Take a look at the trends, right? See, they're green. That's going to be where I favor it. And yeah, Eddie, here's another thing. I thank you for mentioning I work at night. Eddie, we have a lot of members that are in other parts of the world. We have a lot of members that aren't able to day trade with us. I don't want anyone to think day trading is it. I mean, we're talking in the morning, so it makes sense to talk a little bit about day trading. But, Eddie brings up a good point. I work at night, or heck, a lot of people work during the day. How do I put trading in my life if I've got a job and I can't stare at the charts? Well, we have quite a few members that come in and out. And this is where I'll say, if you work at night or during the day or whatnot, slow the time frames down, go to a 1 hour, go to a daily time frame and look for swings. What does that mean? Look for positions that are, for example, that Coke position. All right. So one of our members in the room said, "Hey, Rag, I'm looking at Coke." And we've been looking at staples for a while. Like I said, in the Sector Secrets Mastery, you're going to see I have a very different process for watch list building. And it's really a process that comes from, frankly, some tools specific to my approach and a process specific to relative performers. And Coke is on that list. So imagine you're not in the room, right? Imagine you're not in the room with me. You're not at your desk, but maybe 10, 20, 30 minutes beforehand, you get an alert on your phone, right? You get an alert on this thing. And it says, and what my alerts will have, and I'm trying to find my Coke alert here on the app. What you'll see it'll have is what option you're going to buy. By the way, this is all before it happens, right? I'm not telling the future. What I am here to say is I'm sharing with members what I want to do, which is buy a certain option on Coke. It's a call, which strike, which expiration. At what price do I want to do that? So there's a saying in trading, no trigger, no trade, right? So at what price do I want to do it? What price do I want to scale out, and what's my risk? So you and I may never have a chance to talk that day, but it's like a friend texting you saying, "Look, if this and this and this happens, let's buy this thing." That's what I'm going to do. Take a look at it. If you like it too, something you can consider. That's really what it is. And for a lot of traders in our mastery who are used to getting, "Hey, buy this now, sell this now," but they wouldn't trade any other way other than, "Ron, I want the whole trading plan. I don't want to wait with bated breath for you to tell me when you bought something after the fact, or when you took profit after the fact, or when you got stopped out after the fact. I want to be on the same page as you." And I agree. And that's exactly how we do it. And that's something that we do exclusively in the Sector Secrets Mastery, because that's the way I think about trading. What is it that I want to do? So for example, and I'll wrap it up here. Let's say I wanted to buy Coke again. This is what I could tell everybody. Hey, it's got a trend. I won't think about buying it till about 70.65, and I would like to buy the 70 strike. So now everybody in this room knows, oh, Rog wants to buy the 70 call. If it gets down to about 70.65, that will be her trigger. And she wants to do it because it's an uptrend. Great, right? Then I'll further say things like, hey, you know what? We should definitely pay ourselves up around 71.90, and maybe even before that around 71.20. So the targets for the trades are sent out as well beforehand, right? But that's what trading is. All the entries and all the exits at once. So I've got the entire blueprint. So yeah, if you work at night, yeah, or during the day, gang, that's the way we think about trading. That's the way everyone should think about trading. And that way, whether you're in the room with me or not, I'd love to have you when you can be, but you're going to get updates from me, things about risk, recaps on the day, videos, watch lists, so that even, we have almost 1,000 members in the mastery. We're the biggest mastery at Simpler. And about half of our members are kind of in and out. So I think about those folks as much as I think about the 400 or 500 folks that are hanging out with us in the room day in and day out. All of us have different lives. Trading can fit it. All right, gang. Looking forward to seeing y'all in the mastery. First time simpler. I don't know if we're ever going to do this again, but first time we're doing workshop-based immersion experience. 3 months, 1 hour a day, bite size, the topics you need to know to get you to consistent account growth. Probably the 3 sexiest words I can think of. Okay, gang. Be good to each other. I'll talk with you soon.